What's up guys, welcome to episode 3 of the course. In today's video we're going to start with the setups. As I mentioned before, 5 different setups, and this is the first video called reversals. Like and subscribe as always, and let's immediately get into the video. So the first video about a setup, and as mentioned I'm going to show you literally anything from what the setup is, from very basic steps, very basic language so you understand it, and then we go more into depth about examples. Literally anything where you should enter your TP, your stop loss, when should you trade, when should you not trade, tips and tricks, examples, literally anything. So let's get into it. Reversal patterns are maybe the most important and effective your way of trading in price action, and it's also personally my favorite. I like trading reversals the most because you don't have to change much or even have that much experience. It's just this is how you do it, this is how you're learning. Of course there are 3 different variants which we're going to talk about, but this is how you do it. You just have your level, price reverses, or it reverses not, and you take an L. A reversal pattern, the name says itself, you're looking for a point where price reverses. So for example, price is going in a downtrend, you're looking for a level where price might reverse in the other direction and you buy here. Trading a reversal pattern doesn't mean you wanted the exact bottom or the exact top. You can perfectly enter here, for example, and you still trade a reversal. You can also enter here, but more of that later in the video. Just remember that with a reversal, we're not meant to tap or get in the exact bottom or in the exact top. So let me show you guys what a textbook example of a reversal looks like. You have to study this and remember this. So let's, of course, always the example in a downtrend to uptrend. So this is a textbook reversal. We go down, we have a low, we have a swing high, a lower low, a gain and a hold, and then price makes new highs. So this, remember this very good guys. I'm going to write the names down as well, but remember this very well, but when I write the names it will get more clear. So as mentioned, we're coming from above, of course. We make a low, we have a swing high, we have a lower low, so the lowest point, we gain the swing high or previous levels, and then we create a hold. It's very simple, and it should look very simple. If you think this is already a bit advanced or I'm not really understanding everything, then just take a breather, chill out. It's not that difficult. Just look at this, study the names for 1 second. It's not maths or some hard shit to learn. It's very easy, so just have a look, maybe even pause the video, but this is the foundation of maybe even all trades we use, but surely for a reversal setup. So not something I forgot to mention, but something very important. As mentioned in the courses and everything I explain in the beginner course, liquidity is very important. By now you should know what liquidity is. Liquidity is how easily a setup can be bought and sold, how easily that can go. But of course we use it to identify a potential buy and sell zone. So in zones where a lot of liquidity is, price is likely to reverse or bounce off. And of course that's also a big part in our trading. I'll show you reversals, and I'll talk more when we go to the examples. But of course we're hoping for price to reverse in a zone where there is liquidity or price can sweep something. Of course we're not going to look for reversals just in any spot in the chart, just price drops and made a low locally, oh we can maybe reverse. No, that can happen, but then you have a low probability. We're looking for reversals in zones where there's a lot of liquidity or it's an untested level, but we'll see that. Alright, so before we get into the different types, small recap. What is a reversal? Reversal is where price reverses. So it goes to a level or a zone or whatever you call it, and we want price to reverse in the other direction. So the first type of reversals, there are 3 as mentioned, but we're going to start with the first one. The first one can be called the aggressive one, because you're entering not blindly but without confirmation, as we call it. So imagine this is price. Price is going down and price sweeps your level. Of course you always have to have a level in mind. Whether it's an untested level, a level of liquidity, you're not going to play a reversal just somewhere mid-range or whatever you want. You have to have a level. So imagine price sweeps your level, and you expect price to do this, of course, gain, hold, and make new highs. Now, as mentioned, you can trade with confirmation, that's type 2 and type 3, and wait for price to gain, so you have some confirmation that the price is actually reversing, and long here. But in this example, the aggressive type, type 1, I call it type 1, you can call it whatever you want. We're going to entry immediately when price hits this level. So this will be our setup. I would say this is more high risk, high reward, though of course in every trade you're risking the same amount, but you're betting on, you want that price immediately bounces from this level. The price picked up enough liquidity, enough buy orders to immediately bounce from this level, and the price doesn't need to go a bit lower, or that you have the wrong level, can also happen, and that then price makes a move, because then you get stopped out. I'd say this setup is more for advanced traders because you have to have your levels right. When you don't have your levels right, you can still see some type of reversal somewhere. and then still play with confirmation. But now if your level is wrong, price is just going to jump straight through, and it happened to me before that you place a limit order here on this level, and price, surely when they're in a bigger downtrend and not just going sideways, that price just does this, and you just got stopped out in seconds or just in a couple of minutes. So I'd say this type is more for advanced traders, or when you already have some data and experience, but still you can as a beginner just experiment with this. But the most important thing in this type of setup, this type of reversal, sorry, is that you know where you should look at for your entry, so your levels of liquidity or levels to hold, levels to gain. So to recap here, this is a picture from the Discord where this is all explained again with pictures, images, that's the same thing. So surely join the Discord, link is in the description. So price makes a just coming from above low, swing high, makes a lower low on your level, and you immediately entry. Of course, by now I hope you know what this box with the green and red means. Of course, the middle where the lines cross is your entry, red is your stop loss, green is your take profit. So this is what price is doing. This is your entry as explained here, and you expect price to go up and reverse. So as mentioned, we're also going into the specifics. Of course, every setup is slightly different, but we have some general rules about our stop loss and TP and our entry. But for this setup, entry is of course your point of interest, your line, your untested level. For your stop loss, in this cases, we want a tight stop loss. Why? Because if you had the right level and price actually picked up enough liquidity, it will immediately bounce. The candle, even the 1 minute or the 3 minute candle, will not even close below your level. It will just wick it if you have the right level. And then you don't need a big stop loss of 1 to 2%. And just a tight stop loss is good enough. But of course, you don't have to do a too tight stop loss because then you get stopped out in that wick. Generally on Bitcoin, for example, I take a stop loss of around 0.40% because I feel like that is what I like the most on Bitcoin, that I don't get stopped out and I'm also not risking too much. So keep it tight because, as mentioned, you want price to immediately react from that level, and you don't want price to get below it and range a bit there and then move. That's not what we're trading here. For your TP, this is the perfect example of a setup, the reversal type 1 setup, where you can do a 40-40-20 split. So 40% at first TP, 40% at second TP, and then you leave a 20% runner. I'm normally not a fan of splitting. Having a runner is nice, and I do that sometimes, but having 40-40-20, I don't really like that. But in this example, this is what you can do. I personally don't do it, but you can do it for this. So for example, have your first TP in the swing high, so this level, and then your second TP, you have to look, there are levels here, maybe you see the failure there. We're going to talk about failures more, but if you're already a bit experienced with price action, you can see maybe where price could bounce. If your failure here or something happened there, or you can also, it's not the best, but I do it sometimes as well, just look at where your RR becomes 3 or more and set your TP there. Surely if you do 40-40-20, that's a bit less important, because if you take out 100% of your trade, at one point you need to have a very good take profit, because you don't want price to just go below it or anything. So with a split it's less important, but still, first TP in the swing high, second TP somewhere higher, where your TP is around 3 RR, your setup is around 3 RR, and then you can leave a runner. Okay, let's move forward to type 2, and type 2 is with more confirmation. So type 2, again, you can name it what you want. We have our reversal setup like this. And in type 2, you don't immediately long or set a limit order in the lower low. You long or trade after price gains. So you have a little bit more confirmation that this could be the low, price picked up enough liquidity, gained, and with the gain, I mean price has to close above this level, above the swing high. So price gained, and then on the hold, you long. So for example, like this. After gain and then the hold. So the start of this trade is very similar and literally the same thing as type 1, because they're both reversals, of course. You have to look at your level, your support, whatever. So that's your line. Price sweeps it, and price doesn't even necessarily have to sweep it correctly. Your level doesn't really need to be correct here. It's nice because it gives you an indication from, oh, here I could look for a reversal. But after you get a gain, whether it's on a level you mentioned, or maybe on a less important level, or maybe you can't even find the level, you think it bounced from I don't know where, and then price gained strongly after that low, it can still reverse, so that's not a problem. So you see the setup, lower low, swing high, lower low, gain, hold. This is where you want to entry. This is your setup. You want to have your stop loss above the lower low, but more about that in a second, and then you expect price to go up. So in this setup, I guess it's better for beginners because you have more confirmation, but it's also a bit more difficult because in the first type of reversal, you know where you entry. It's on your level. You just have to place limit order. For this type of setup, you have to feel it a bit. And what I mean with feel, after the gain, price can retrace to here, to here, to here, even down here, not making a new low though, because then it's not a reversal, and then pump. So you of course want to entry as low as possible to have the biggest RR, but you never know if price returns here, returns here, returns here, or just makes a short correction. So what is the main rule or the main reason? You entry around this box. So a box from your swing high top to a bit below. It's a bit of guessing work, but after time you also learn different situations and can see a bit more often where it will go exactly. But at the start we say somewhere behind your swing high. You can also entry on the top of the swing high, but I wouldn't recommend it because often then you have a huge gap here. And as mentioned, stop loss should be just above the lower low. If your gain is too high up and your swing high is like this, create an example, it's like this, and of course, or no, like this, you want to gain too long here, then of course you're going to have a big stop loss if you want to cover all of this to the lower low. So when it's a very big range and not like on Bitcoin, for example, you have a stop loss of 0.5%, 0.4%, 0.40%, I mean, then you can just do that. But in this case, you don't want to set your stop loss like to the low. Then you just, as mentioned, to 0.40 stop loss or just something that makes sense. But again, that's experience, you have to feel it, and I know I've said that often today in this video, but I'm just explaining the theory, how you can do that, and you're going to lose some trades. Reversals also don't have a 100% hit rate, of course, it's a probability game, but you have to collect data, collect experience, and then after a while you start tweaking those things, you start implementing these small things from this setup. I've seen this exactly, and yeah, in this type of setup it went fully down here, so I'm not going to entry on top, I'm just going to wait, and then you see it plays out. And your TP should be based on previous levels here, and also of course we always say have at least or around 3 RR. What you also can do if you don't find a comfortable spot for your stop loss when it's a big range, you can always just keep your stop loss big and have an RR of 2 or 1.5, and then just take profits early, and then you don't have to limit everything in. Then maybe you have to manage a trade and sit by the chart, like when prices, the momentum is losing, and then you have to close 40-50% there. So that was type 2 already with more confirmation, and you can maybe guess already type 3 is with even more confirmation. So type 3 is you wait for the entire reversal to happen, so also the gain, hold, and the new highs. And then price will go up, go down, and at a given moment price will return to this level, to the hold. Because in this hold, price needed to push, buy orders needed to be there, people had to buy to push price from a downtrend or moving to new lows to gain, hold, and make entire new highs. So this is a zone where a lot of liquidity lays, and price will likely react from if it retraces. So price does here, go up, go down, and then come back here, and that's where you want to enter. So if you look at the image, there's a small mistake in this image though, because I mentioned the entry on this level that you want to sweep here, but of course the entry has to be on this level, the hold. So here should your entry be, but for the explanation doesn't matter a lot. So again mentioned, full reversal happens, the same start of every reversal, you mark out your level you want to sweep, full reversal happens, blah blah blah, price comes back, and most of the time it's after a couple of hours or a day, and not like after a week, but it happens in a short time frame. And then you want to long here. This gives even more confirmation because the entire reversal happened. You're not betting on a reversal happening anymore, you're just betting on a continuation, which is probability wise a bit better, surely for beginners if you don't have experience. So as mentioned, your entry should be on the hold, so literally here and not here, sorry for the image, and your stop loss should again be just above the lower low, but as mentioned, if it's a big move you can use 0.40 on Bitcoin for example, or you have to feel it. And your TP, you have to base it off levels like here, because for example if price did this, so if you reversal, gain, hold, new highs, and it comes back pretty soon to this level here, then you can see, oh, this is a failure of the uptrend, so that can be a TP, this can be a TP, the top can be a TP, blah blah blah. And then of course your stop loss, if this is your entry, this level, I'll mark it out, this is your entry. You see this is my first TP, then you're not going to use this as stop loss because you even have a negative R. Then just use 0.40, or of course these percentages don't work because I'm doing random things as you see, but then just use a stop loss like this, and this is your full TP. Maybe a bit vague, but you get what I mean. I mentioned that the theory is pretty spot on, that this is what you do and that's it, and that's true, but with experience you learn how to tweak it and to have a higher probability and a higher win rate. So quick recap on the reversals. Type 1 is the most aggressive one. You immediately long or limit order when price hits your entry, hits your level you want to sweep, and you're betting on price picking up enough liquidity and immediately moving. Type 2 is a little bit more confirmation. You wait for the reversal to almost happen. You wait for price to sweep, gain, and on the hold you long. You're not betting on is it an actual reversal. You're betting on, oh, we saw the gain, this is some strong confirmation, and then we long to continue the local reversal. And then type 3 with the most confirmation and also the easiest for beginners. You wait for the entire reversal to happen, you wait for price to do its things and then come back to the hold, and then you long to continue the big trend and not just the local reversal. If this was much and maybe my explanation wasn't top, you can join the server as mentioned. Literally anything is written down there with examples, pictures I showed here. So that's very nice as a follow-up to this video. And maybe you can start experimenting yourself. Go to TradingView, mark out key levels, and look when price sweeps it or what it does, if it actually creates what I mentioned. Actually that pattern, because that works, you have to remember that with the low, swing high, lower low, gain hold. See how it moves, and of course it's never going to be perfect like the image. Sometimes the swing high is a bit higher or the low is a bit lower. You get what I mean, but in the core it will always be that pattern. For now, I want to thank you guys for watching. This is only the first video of the 5 setups, so we're not done yet with the sauce. I want to thank you guys for watching, and I'll see you guys in the next video.